WNOV, The Voice. The views and opinions expressed on this show do not reflect that of the staff and management of WNOV and W293CX 106.5 FM Courier Communications Milwaukee, but are the sole comment of the host and guest of this particular show.
Money Talks with Attorney Charles. This is Attorney Charles and I'm the host of the show. And every week, this show is sponsored by Columbia Savings and Loan Association. Special thank you to Columbia for sponsoring this weekly show where we talk about all things that are related to money. So it's been a couple weeks since I've been here. Last week I know it was Juneteenth, and the week before that I was out in Utah doing some training for the bank. So I've missed the audience and the excellent feedback and interaction that we always get every week. So I'm glad to be back and hoping that the audience will call in with any questions or comments about any of the topics that we're going to cover today. So, without any further delay, I would like to introduce my special guest on the show this morning, Mr. Gulbaz Gill. Gulbaz, say hello to the people.
Hello, everyone, and Coral, thank you for having me. Appreciate it.
Yeah, thank you so much for being here, Gulbaz. So, audience, you might recall, if you've been listening regularly, you may recall that Gulbaz Gill works with Columbia Savings and Loan Association, office right next to mine in the bank. And Gulbaz is our executive director of lending and finance. So he's the man with all the know-how when it comes to the loans. So thank you for coming today, Gulbaz.
It's my pleasure, Coral.
So every once in a while, we do a show like the one that we have planned for you today, where it's informational. We just are really, we certainly aren't offering advice. I don't do that over the air. I don't do that over the air, whether it's for legal matters or for any matters related to the bank. The thing about banking, and Gobas says this to me all the time, that every case is different. Every customer is different. Every loan is a little bit different. So we don't like to give advice because we're not talking to any particular individual about their particular circumstances. What we're going to be talking about today are some generalizations. Is that right, Gobas?
Absolutely right. You just said it perfectly, Coral. Um, Loans, financial situations are always different for everybody. Same product, same property can be bought from different two individuals, and circumstances can be entirely different.
Right.
So that's why it's case by case, and that's what make this job fun also, because you don't repeat the same thing every day. You have different challenges, you have different solutions every day. You learn different solutions every day from your associates.
Right. So like different nuances just depending upon, case by case basis, right?
Absolutely.
Well, so there were a couple of things that today we said that we were going to talk about. I know previously we talked about equity,
Mhm.
and we made a point of defining that, making sure people understood what that meant, whether they were focused on whether or not they had equity in their property, or what does equity mean if you're selling the property. And so we really talked about that from a lot of different angles, and we did get some good feedback from those shows that type of discussion is helpful to have from time to time. So today we thought we would talk about the topic of insurance as well as the topic of escrow and how those two relate to one another, because when you're talking banking, they are kind of intertwined. Is that not so?
Yes, they are. They are.
Okay.
So
So go ahead, Gobaz. I invite you to speak, and then I'm doing all the talking. So you go
perfect.
ahead and talk about maybe just to start real basically, what is insurance and what is escrow and how do the two relate in banking?
So let me start with escrow actually first. Our payment consists of four things: principal, interest, taxes, I'm talking about property taxes, and insurance, which is hazard insurance, which protect our collateral from the banker point of view and protect your residence, your business from an owner point of view. So that escrow, when we use the word escrow, is combination of property taxes and the insurance portion, which 99% bank requires you to have it because it protects our collateral because we have lent money against this specific property.
Okay,
So
so what you're saying is the monthly payment that people make
make
to a bank, such
absolutely
as ours, for a mortgage payment, it's really that payment includes several things.
right, and those
Okay.
several things are four things. Number
Mm-hmm.
one is principal coming back to the bank and dropping your principal amount. Number two is the interest which we agree upon, which is a profit for the bank, and the and you get that money which you use to purchase this property. That is the return on that. That's a return asset for us. And then property tax, because property taxes are the taxes which city, village, county put on those properties which needed to be paid back to them every year at the end of the year or the beginning of the year. So bank want to make sure that those property taxes are paid, because just in case if people default on those property taxes, those liens come in front of the mortgage which we put on the collateral, so which secure the interest of the bank and interest of the person as well, that instead of not paying those taxes and being default on it, we collect them ahead of time. Same thing for the insurance as well. And when I use insurance, that's a hazard insurance they call it, because it's securing the property. God forbid if any accident happen, fire, or any kind of disaster happen, disaster like a thunderstorm or a hail or any kind of damage which can be caused to that collateral, is protected by that insurance, because again we have interest on that property and person who's living in it, they also have to be secure. So that's why we banks request customer to be in escrow with the pni, principal and interest, to protect themselves and to protect our collateral.
Okay. So escrow then is, in the simplest of terms, it's like a little pot where money goes, that when you pay your mortgage every month, there's a certain amount of it that goes into this pot that we're calling escrow, and it's held until either it's time to pay property taxes on the property, or when it's time to pay what you called hazard insurance,
Insurance.
which is the same as the insurance that I'm talking
Absolutely.
about. We're using different terminology, but we're referring to the same
Same thing.
thing.
Basically, escrow is a fund which does not belong to either parties. It's a fund which bank open. That's actually escrow is. That is the fund which does not belong to the person who's giving and does not belong to the person who's getting. We put that money in that bucket or pot, as you mentioned, and we keep it until it's needed. Needed means at the end of the year or beginning of the year when we pay property tax. Needed whenever we pay the premium on that insurance. So that money is sat in that escrow account slash pot account or bucket account until it's needed for a certain cause. So that's basically what escrow's definition is.
Right. So let's say if my hazard insurance on my property costs $1,200 a month, or sorry, costs
Yeah.
$1,200 a year. Let's bite my tongue for saying
No,
monthly.
not yet. Yeah, we're not
but
there yet.
but yeah, that'd be quite a home, wouldn't it? Um, if my insurance, my hazard insurance, is $1,200 a year, then just in simplest of math, that means I'd pay $100 every month, at least $100 every month, that would go towards my payment on my hazard insurance.
Exactly, that's the simplest way. But normally, because we are collecting funds in advance for something which has not occurred yet, so we normally calculated 13 months instead of 12 months. Same thing for property taxes, same thing for insurance. Because of the inflation, we don't know where the amount going to be, So when we calculate them, we take the total amount divided by 12, which is 12 months, but then times it with 13, so that we can figure it out what exactly the exact amount could be. So that's basically the simple math on
Okay,
that.
and I like that, and that's a smart explanation that I think people can understand, because prices don't tend to go down; they tend to go up, and that's true of insurance, and it's certainly almost always true when it comes to property taxes.
Yeah, and the biggest example for property taxes are, when we say that our house value went up, our neighbor sold his house for 10 times more price which you bought it 2 years ago or 3 years ago. That house set up the market value of your house as well, because if your neighbor sold that house on a profit, we call it comparable, that also increase the value of your property. I'm not saying only house, it could be business, any, it could be land also. Now because the value of your land went up, taxes are based on the value, so your property tax went up. So that's why, we are hoping that real estate always goes up. We always pray for it. It's our livelihood, it's our investment, and we want our investment to be profitable. But that profit also come with an expense, and that is the property tax raise every year. And we have seen that for the last, I've been in banking for 20 years, that the value of real estate are always goes up, and the property tax always goes up with that as well, because more the value is, that set the tax amount as well.
Well, it's so funny that you say that because we were talking on an earlier show about equity, and people are happy when the property value goes up and it
Yeah.
increases their equity, but nobody's happy when the taxes that coincide with that have to be paid.
Yeah. Coral, it might be a little bit off topic, and we'll come back to insurance as well. Uh, but I really want to talk about equity as well.
Okay.
Maybe we can talk about it after the insurance when we
No,
discuss.
please
Yeah.
do, because since I've brought it up a couple of times now, maybe everyone who's listening today may not have caught the show where we talked about equity. So please go
Yeah.
give us a refresher with equity so the
So
conversation makes
yeah.
sense.
So last show we talk about equity, and we discussed that equity is a portion which is of like, subtracting your loan amount or subtracting whatever amount you owed, if that with taxes or loan with the bank or however it is, that portion is your equity. But the the discussion which I want to have today is that equity really worth to our owners? That equity is only in our head until we use that equity wisely. We will only get that equity when we sell that house. We can or refinance that house. Then we can get that equity cash. Uh, but I just want to just a little touch. I mean, this was a refresher, but I was having this discussion with one of my another very good friend. He's in financial institution, and we were just discussing this and saying to each other, just it was just a talk, that we all believe that we have a house which is value 400,000, and we bought it for 200,000, and today the loan is only 100,000, so we have a $300,000 value in that house. But if you sell that house today, Coral, it's not related with banking, it's just a discussion.
Hmm.
If we sell that house today and you make 300,000 and you go and buy a new house, you will a similar house, that house might costing you the same amount. So where that equity is gone. So the smarter people nowadays doing, and I recommend that to everybody now, try to get and being a banker, I'm not trying to sell this, but it's just an opinion, it's just a suggestion. When we when we say that our house have value and it have equity, go and talk to your banker and see if you guys can cash that value in home equity line of credit, HELOC. Because once you cash it and they give you a line of credit, then you can maybe use those funds to buy another property, to buy another business. Because if you sell that house, you get the full amount, but when you buy a similar house for the same thing, you will not make anything unless you rent it. But now if you rent it, that's a cost to you. So the best idea is to have a HELOC on your houses, HELOC or commercial line of credit, whatever your banker suggests. Go and talk to them.
And HELOC is a home
Home
equity
equity line
line
of
of
credit.
credit.
Thank you. Yeah,
Okay.
I should say that.
Yep.
Sorry.
Yep. Got it.
Home equity line of credit. Then you guys can use those funds which are available to you to buy a business, to buy another property, to buy another piece of land by using that equity. Unless you sell that house, this equity is not yours. It's just over here in your head. It's not physically with you. Unless you sell it, only then it's liquid. So just a suggestion I want to bring up,
Mhm.
just, and maybe we can have another show in detail where I'm more prepared to talk about it. But
Mhm.
since this was just few days ago discussion,
Mhm.
and I thought maybe I should share this and put this thing in our listeners mind, and maybe they can comment us on YouTube, Facebook, wherever you're listening, and help us create a new show on this one and discuss with us over the
Mhm.
phone and share their ideas with us, uh positive or negative. I mean,
Mhm.
like, story with us and tell us like what you think about this idea of
Mhm.
going to the bank. Because remember, if you have a strong equity, which I believe nowadays everybody have, because the values are gone up so much, they should use it. They should definitely use it. The other thing is,
Wait, before you go on, I just want to, because I think you said a lot that's very important. I just want to make sure that it's perfectly clear
please.
what you are just presenting as an option. Again, we're not advising
Mm,
people. In fact, we're asking folks to call in and tell us what their thoughts might be, or if they've had this experience. But so what you're saying is, if you have a home and then you sell and there was 300,000 in equity, you go put 300,000 down on the new home, you don't have cash to work with. So that's what you're saying, just in terms of that equity goes away. You may have, or you will have equity in that new property, but it's not cash. It's equity,
it's equity,
right?
right? And
Versus if you get you said a HELOC, so a home equity
a
line of
line of credit.
credit, and then instead consider the possibility of using that money to invest in a business or to invest in maybe some other real estate, things that are going to be income generating.
Rental properties, business, you can use that equity and buy those income generating assets, which will actually increase your income. And if you want to go and buy a new house, go and buy a new house on the home equity, because then you still have that house available for you. You move into your new house and rent that house. So now that asset, which the only cost you have on that house is property taxes, is
Mhm.
generating income for you. There's so many remember, case by case.
Right.
So study it. Think about your property before you sell it. Try to use that equity. Try to build more wealth, the wealth you existing currently has. Then you can grow instead of getting rid of it and buying and go back to the same cycle of making payments. You
Right.
know,
Right.
um,
Well, before we go on, it looks like we do have a caller that's holding. Um Jermaine, do we have a caller that's holding here? Okay, caller, please go ahead.
Thank you. I'm coming through now. Thank you. Thank you very much for taking my
Hi,
call.
Tyrone. I
Yes,
caught your
ma'am.
voice.
Well, yes, ma'am. Thank you. Yes,
How are
it is
you
a
today?
blessed, joyful, grateful things in the Lord. Thanks for asking. How about you and family and sister and all?
Quite well. Everyone is doing
Good.
great.
Tell everyone hi. Mr. Rideout, Mr. Garbage.
yes,
Yes, hi there. How are you, my friend?
I'm doing good, Tyron.
Yes, yes, Milwaukee. Yeah, I know you're talking taxes and the different things along those lines there with equity and taxes and all that, but it really grabbed my feathers there because I understand that there's a lot of markets that's pulling out like Krog and Pick and Save and some of the others, and it made me the government. It's like I live on I'm on 71st Street, but I mean I don't have flood insurance. If Lake Michigan decides to do something, they're not going to say, well, you didn't have flood insurance or anything like that. Just like when the piss water came up through the floor drain in the lower level there, no FEMA couldn't do nothing. No, we don't. You didn't have. But my legs are messed up behind that though, and round up and everything else. But what I'm saying is, if you decide to pull out of business and everything because of property or merchandise protection and thievery, you have a stipend from the government, so you're covered either way because you went into business and the government said, well, you're paying your taxes and all that, but you're making money, but we have a stipend for you just for being in the business. And then plus on top of that, you can buy back your own stocks then. So they've got multi, and then plus on top of that, then well, you can lower the prices there, and people will come to you and buy the product instead of you having to waste it and have to steal it. Lower the price, and then you help yourself and everybody else. So I don't understand why businesses are biting the gauntlet and saying, well, there's no place we can turn because people are stealing. That's a bunch of flying bulls to me because well, you're still making money. You understand what I'm saying?
Yes. Yes.
And furthermore, I mean, well, if you close, if you're closing a handful of stores in certain areas, well, what make you think they ain't gonna go out there and steal where you didn't close the other ones? you you know you're slapping yourself on the left side of the face, hoping that you don't feel it on the right side. That don't make sense to me because it doesn't. If people have been stealing since the Bible, since the beginning of time. There, you knew that when you was going into it. So I mean, to pull out of business now after you've made a whole bunch of money and whatever you should have insurance. So if you got insurance, you should and protection. So something's not right somewhere with everybody packing up saying, "Well, I got to go because they're stealing." Well, to me that's a bunch of flying bull. But it's only an hour or so. But I just wanted to you know uh, bring that across you there and let you think about that for a while. But have a great weekend. Have a wonderful Fourth. We did Juneteenth, but have a wonderful Fourth and love you. And we'll talk soon.
Okay,
Take care,
thanks.
Karen.
Yep,
Thank you.
thanks, Tyrone. And we do need to take a break, but we will be right back with more Money Talk from Attorney Coral and Mr. Gulbaz Gill.
ARN. I'm Jamie Jackson. A new study from researchers at UC is challenging common beliefs about marijuana safety, and it's not just about smoking. Published in the Journal of the American Medical Association, a study followed 55 healthy cannabis users and found that both marijuana smokers and those who consume edibles showed signs of vascular dysfunction. That's a red flag for potential heart disease. In particular, the researchers found that people who smoked marijuana had changes in their blood serum that damaged the cells lining blood vessels. Those who used THC edibles didn't show the same serum changes, but still had impaired blood vessel function overall. Now, the findings suggest that cannabis, whether smoked or eaten, may pose cardiovascular risk, especially with long-term use. Researchers say rising legalization and increased use make this issue more urgent than ever. For you all, here's a look at your updated forecast. For today, as you thought possible early on, otherwise we'll see decreasing clouds, a chance for a late day storm with highs in the mid 80s. Showers and storms and likely for tonight, a low of 66. For Friday, there's a slight chance for a lingering shower or storm, otherwise becoming partly sunny with highs in the lower 80s. Saturday, lots of sun, highs in the upper 70s. I'm meteorologist Michael Carroll on AM 860, The Voice. Hi, this is Christopher's Project. Did you know saxophonist composer Grover Washington Jr. was born in Buffalo, New York on December 12, 1943? He actually came from a musical family. His father played tenor saxophone, his mother sang the choir, one brother was organist in the church choir, and his younger brother Gerald became a drummer who was later known professionally. Like his father, Washington soon took up saxophone and started playing at the age of 10. This Black Music Club is brought to you by Walkie County Office of Public Julie Black Music Club and the Walkie County Office of Equity joins WMOE in its salute. African American artists have created and influenced various forms of music, from gospel to rock and roll, removing health barriers from millions of our listeners. Say big on everything Menards is the destination for everything you like to go. Whether you're trying to create the perfect ambiance with a stylish studio or seeking the right USB outlet to charge your mobile devices, Menards has a wide selection of outlets and switches to fit your everyday needs. Plus, check out our weekly flyer on Menards.com for more
State Fair is right around the corner, and it's fun to save with a savings. These $15 tickets will only be available through June 29th. Save today so you'll be feeling good at the Wisconsin State Fair presented by U.S. Cellular, July 31st and August 10th.
860 AM 106.5 FM. WNV, the voice.
Welcome back. This is Money Talks with Attorney Pearl. Thank you so much for joining us. And the show is sponsored by Community Savings Loan Association. So thank you again for sponsoring the Money Talks show. If anyone would like to call in and join our discussion this morning, the phone number here is 414-444-5250. That is 414-444-5250 or 5253. And I am joined this morning by Mr. Gulbaz Gill, who is the Executive Director of Lending and Finance at Columbia Savings and Loan Association. And we're talking today about insurance, escrow. We talked a little bit about equity and properties because all of these things tie in together. But insurance and escrow are the main topics of today, right, Golbas?
Yes. Yes. Of course.
Okay. So before we went to break, we were getting into you gave a little bit of a segue just to talk briefly about equity because that's something that we've covered on the shows before. But today's more focused on insurance and escrow. You talked a bit about escrow, but we wanted to circle back and say more about insurance. So the microphone is yours.
Yes. So insurance are of different type. When I say we, that means bank requires insurance. We call it hazard insurance. I mean, it could be theft insurance, it could be the FEMA insurance or anything. But our requirement is more of a hazard insurance, which protect us on any disaster if anything happens to our collateral. When I use the word collateral, that means the property we lend against. That's basically what collateral is. So the insurance we require is, God forbid, if a storm comes in, a thunderstorm comes in, a tornado hits our property, or in occurrence of fire, or in occurrence of any water damage which can destroy our property, and anything can happen to the foundation of the property, anything related to our collateral need to be covered, because if anything wrong happens, we have to take the property back, or something happened to our customer because of that incident and now they're behind on the payment. We want to make sure that these insurance company covers us and our borrower, the residents of or the owner of that property. When we talk about insurance, a lot of people, when buy a house, let's just talk about buying a house. When you buy a house, we say, hey, we want insurance, we want property tax to be paid ahead, and we dump that money into an escrow account, as we explained earlier. And at the time of payment, premium payment or property tax payment, we will be responsible for that, and we'll disperse those funds to the entities. In this case, a lot of people think, oh, it's only for the bank coverage, it only protect the bank. But I just want to emphasize on this thing, that this insurance also covers our residents of that house also. I'll give you a real live example. One of my very good friend owns a house, and about 3 years ago, we have a bad hailstorm. Somebody came to him, and they noticed that their roof have some hail damage, which was not even visible to our eyes. And because of that, they have the whole roof replaced, and the insurance company covers it. And when I'm saying that, I'm not advising anything, I'm not suggesting anything, I'm just sharing somebody's experience, what they have. Now, Either if they didn't have that insurance with them, this roof would not be covered. He have gotten an estimate which cost him almost $20,000, a big house. So $20 to $25,000 was an estimate to replace that roof. Now a lot of people think, oh my God, if I replace that roof, like when we buy a car and car have insurance, and if the car got into an accident, now your premium goes up. What he told me is because he have a brand new roof now, 20-year roof is gone, and now he have a brand new roof. His premium never went up because $20,000 expense has been poured into that house, and now you have a newer roof which actually increase the value of that collateral, increase the value of that house, and give more longevity of that incident to happen again. So the premium never went up. Now I'm not saying that it will never went up. For him it never went up because it offsets it. Because remember, cars, moving bodies have depreciating value. House have appreciating value. Residence or land or anything related with real estate have appreciating value. Similar thing happened to with his siding. He have whole siding replaced because there was some hail damage. Another incident, somebody was telling me that there was bad storm, bad wind came in and knocked down his fence. Their fence was removed. Now I'm not saying that you should all call people and do it, but all I'm saying is having that insurance is so beneficial not only for the bank but for the residents of that house and for the betterment of that collateral also, because it gives more. So if you want to sell that house today, what will you say? People ask you, how old is a roof? That's a common question when people buy a house. You say it's only 1 year, 2 year old roof. Man, people have more interest in this property. So that increases the value of your product, which is your house in this case. So these insurances are not bad, but we don't know what our riders are. So when you sign this mortgage, please do not think it's only for the benefit of the bank.
Is
It's
that
for the
is that what customers think? So that's what
a
I
lot
wanted
of
to ask
people
you.
think.
Have you had a situation where customers just think that the insurance is only to cover the bank, it's just for the benefit of the bank? You said it well, rather than knowing that it protects them too. People
Coral,
don't get that.
Coral, when you ask me for the show and we talk about insurance, this thing just happened. Of course, I cannot reveal the names and all the stuff. This conversation which I have was actually with one of our customers, actually two of our customers.
Hmm.
People don't read their writers, like what kind of rights they have on it. You
Hmm.
know, one of my and I'm talking about the real customer, a real person who I know, their basement got sewer water in them, and because that there was insurance, that insurance helped them. That was enforced by the bank originally, because they were probably uh, that insurance covered the whole cost of it, and now they have a beautiful basement. Everything was cleaned up, everything was managed properly with a licensed contractor, watched by the insurance company because they are paying them. So it's all covered. These are real life stories I'm sharing with you, that these things been covered by the insurance.
And
So
we know, I mean, that's real life. I mean, in Milwaukee, that has been an issue. Before, I personally have had that issue where you're going along with life, and the next thing you know, the sewage backs up in the basement, and what do you do? Because it causes thousands of dollars worth of damage.
mhm,
And this is where insurance may come into play and may offset some of those costs or even pay in their entirety. I know Tyrone was saying, well, there's situations that happen and then FEMA didn't help and, insurance didn't help. And I don't know what the facts were in those circumstances and the situations that he mentioned. But even in my prior home that I owned, there was a flood where the water came back in the basement. And when I'm telling you, it was a ranch style home. So you know how large basements are in ranch
yeah,
style homes. There was 18 inches of water standing in my
wow,
basement, and everything was ruined. The furnace was ruined, the washing machine, the dryer, the treadmill, or the sump pump. I mean, whatever, the dehumidifier, anything, not to mention furniture
Furniture,
and
yeah.
all of those things. But it was a disaster, and it was my entire subdivision. I remember this was back in 2008. If anybody lived in the Beaver Creek subdivision in Brown Deer in 2008, you remember, because I remember driving through the subdivision and people had sofas and whatever sitting outside at the base of their driveways to be thrown out because this terrible thing happened. But FEMA came in and actually literally helped offset some of these costs, which is a whole other issue. But the insurance, which is what we're talking about today, most definitely stepped up and said, okay, what's it going to cost to replace your furnace? What's it going to cost? And you give them an itemization. Of course, they come and they verify, the damages. Back then, they physically sent someone out to verify. But the most recent sewage backup debacle that I had is in a different home, but again, a ranch style home. So a huge basement that was a finished basement with the walls, finished, the ceilings, carpeting, which I don't think I'll ever do that in a basement again. But even
Mhm.
the half of the basement that was tiled floor, linoleum, all of these things were ruined. And the process was different. The insurance company never came out to investigate it, but they have a little app that you work through, and it'll take pictures of all of the damage and they make an assessment. And in my case, fortunately, they were able to say, let's pay the policy limit because the damage was evident. There was just no way around it. So thank goodness that there's insurance that you can lean on in a situation like that.
I just want to add one thing. I was a junior lander at that time. I remember that a big, a lot of Milwaukee.
Hmm.
Matter of fact, FEMA has also helped some people to make their payments. Also, that's another thing. I remember that. Uh,
Their mortgage payments.
yeah, yeah,
Okay.
couple months because of the
All
disaster. I
right.
think
I
it was
didn't
a
know that.
disaster like
Yeah.
we had like the EDL loans when COVID happens. Similar
Okay.
thing in those days. But again, with insurance, we can also have riders. Talk to your insurance personnel. They have those type of protections. So when we get when we request, we never, when I use the word we, please understand bank. When bank request insurance, their request is to protect the collateral only. But you can discuss a little bit more with your insurance agent and ask them, can I add different riders? Use the word riders with them. They will know what that you know what they can add. There are some protections for the payment. The P&I payment can be covered in that. And but again, every insurance company is different. Talk to your insurance agent. Don't just say, hey, I'm on insurance for a bank. Say, hey, I'm getting insurance on my house, which protects the bank also. And bank want to just make sure that we are covered for certain things, but you can always add more riders. You can have disability, you can have a mortgage payment disaster, a job laid off from job. I don't know exactly how they what they call it, but talk to your insurance company, they or agent. They will explain you. It might have cost you a little bit more, but it will protect you from all those disaster. Losing job is a disaster. Having a flood in your basement is a disaster. Having hail storm is a disaster. Thunderstorm or tornadoes are a disaster. We live in Wisconsin. We know weather is unpredictable. We know anything happens. Especially learning about uh, seeing this big pandemic of COVID, things can change in days. You're happy, you're so happy, everything is going on great, but within 2 days you find out, oh, I lost everything. I don't have a job. I'm laid off. I cannot work. How government is there to help us, but we have to help ourselves as well. And that is something which we can discuss with our insurance agent. Please, I cannot emphasize more. When you call your insurance agent, don't just say, hey, I want insurance for the bank. Just say, hey, I want insurance. Come meet me, discuss my options, see if your pocket allows you to pay a little bit more but protect you. I'm not here to advocate for insurance companies. I'm a banker, right? All I'm saying is talk. Money talks. Same thing. When you talk to people and learn about these things saves you money. That's all it is. This will save you by paying a little bit more, protecting you a little bit more. It will protect you long term. It will save you thousands of dollars, as Coral mentioned. As I gave you a real life story of my friend, I gave you a real life story of few of our customers. They could save, they are saving. So please, please talk to save money. That is this show about. Money talks. But it's not that money talks. We need to talk to people. We need to talk to our insurance people, our financial advisors, our bankers who can help you, our attorneys, our similar related folks who can always protect us and make more money for us.
So I actually have a couple other examples that I want
Here
to
we
share
go.
that I think will resonate with people, and these are real life examples from my law practice. Because, as you know, for many years, um, I specialized in insurance litigation, and now also estate planning. So those are still the two main areas where I work, and I've worked on both sides of the insurance um, issue. So there's times when I've represented the insurance companies in defense of a claim or lawsuit that was brought against them, and sometimes I've represented individuals who've been hurt. So or a couple in particular that come to mind that might resonate with the audience. There was a gentleman who owned a property in the city of Milwaukee. He, however, did not live in the city of Milwaukee. This gentleman was an absentee landlord and he lived in California, and he didn't have a good system in place for how his property would be maintained. And as Wisconsin winters go, we ended up having a pretty nasty snowstorm, and this gentleman didn't have anyone assigned to clean up the snow at his property, although the property was rented out to an individual. And several days went by where people walked on the snow and walked, and so, needless to say, it turned to ice. There was just a patch of ice all the way around the home and on the walkways leading up to the front door. Well, there was a young lady who was invited to this home as a guest, and she came, and she brought her young child who was an infant. She was carrying him at the time. It's evening time, it wasn't even well lit. And you know where this is going. The young woman who was carrying her child stepped on this patch of ice leading up to the front door, and down she went. And she fell in such a way. Her main concern was to make sure that her son wasn't hurt. So she didn't want him to hit the concrete or the ice to be hurt, and she didn't pay attention to herself. So when she fell in such a way that it ended up being a very nasty broken ankle, and that's not a good spot. No place is a good spot to break, but she had a very nasty injury for which she had to be hospitalized. She had to have surgery. She had to have pins placed that ultimately she had a reaction to, so they had to be removed. So it was just a grueling recovery for a young single mother who had an infant to take care of. Fortunately, she had some family on hand that was able to step in and help her out with that recovery. But she certainly made a claim against the owner of this property because he was negligent in his duty to make those premises safe, right? So this was a hazardous condition was allowed to persist for days, and then this young lady fell. So in any event, that was a terrible situation, but fortunately, there was homeowners insurance. So it's good for people to know, and that's the reason I'm bringing it up. That you mentioned that sometimes customers think that the insurance is just to protect the bank. Well, in a situation like this, that insurance protected the owner of the home, so that he didn't have to incur personal liability for her six-figure medical expense because it was substantial. By the time her treatment was complete, she ended up with a permanent partial disability because it was a surgical joint. So this was a very nasty injury, but she was able to get compensation because obviously there was time missed from work. There were medical bills that were exorbitant, and so that situation happened. But again, there was insurance in place, so the coverage was had, and we were. How do you make when it's a permanent injury? But it looks like it's time for us to take another break, and then Gobaz, I'll let you speak when we come back. This is Money Talks with Attorney Coral, Mr. Gobaz Gill. We're talking about insurance, property insurance, hazard insurance, and escrow this morning. We'll be right back. Welcome back. This is Money Talks with Attorney Coral Bulldogs, who is the Executive Director of Lending and Finance with Columbia Savings and Loan Association. That's a mouthful, right, Golbaz?
I'm a commercial lender. I'm a lender. That's I'm a
Well, we
banker.
appreciate you being here. And right before we went to break, I was just offering examples, because you mentioned earlier that sometimes customers think that hazard insurance on their properties is just to protect the bank, but we're wanting to also get the point across that there are opportunities. There's times where it protects the customers, as well as the bank. And so I had given an example of a young lady who slipped and fell on a nasty, icy sidewalk and had a serious break. But I'd like to bring up one more example because this is a circumstance where people might not know to connect their homeowner's insurance. So, what happened, long story short, I'm going to try to give this really fast, but there was a young couple that was getting married, and the bride and her bridesmaid, they were very young. The bride was maybe 21 and the bridesmaid was like 15 or 16, and they stayed overnight in a hotel. And you notice that they have those sprinkler heads in hotels now. I think it really was because of my people in this case that they started posting those signs saying don't hang anything. They'll put a picture of a hanger in a circle and a line through it. Don't hang garments on these sprinkler heads, because these young people didn't know what they didn't know. And so the 15-year-old climbed up on a chair and hung the bride's wedding gown because she had a long train. So they wanted it to be able to stretch out. Now, the bride didn't actually physically hang it up, but she acted in concert by saying, "Yes, I think that's good. Let me hold the chair while you stand up there." So spreading out the train. So the two of them did this thing. Um, so anyway, needless to say, the sprinkler heads went off and flooded the hotel and flooded the floors, and water seeped, well, ruined several rooms on that floor. Of course, the fire department came out, but by the time they got there, the damage was done. Water had gone into the lower floor and ruined, the carpeting and some of the furnishings. It came out for quite a while, so there was a significant amount of damage that was done. If I recall correctly, it was about $80,000 worth of damage that was done just by hanging this wedding gown. So the hotel, it was one in Waukesha. I wouldn't say if I could remember the name of it, but I just don't even remember. But the hotel made a claim against its own insurance company for the water damage. And then just when you think all was quiet, well, that insurance company paid the claim in full. They didn't hesitate, but they did then turn around and sue the bride and the bridesmaid. And yes, they sued this little girl who was not a legal adult, but she's of age to be negligent. But what was interesting, and I at first wouldn't have thought this would have been applicable, but they sued the homeowner's insurance because the teenager lived at home with her parents. So they sued that policy, they sued that insurance company. Which if no, I didn't represent her. I represented the bride. I had to stop and think who I represented. But the bride and her groom to be, although they were young, they did own a home and it had insurance on it. So they sued her as well as her homeowner's insurance company. So that's how I entered into the case. I defended that insurance company, as well as the bride to be. Her dress was ruined, by the way, and there was a whole big debacle. She ended up having to wear something different for her wedding, and I felt bad. She just sobbed and cried. That was like the sad part about it. But long story short, part of the argument, the case ended up going to trial because they kept saying that we should pay the majority of it because the other young lady was underage. And I said, if you're 7 years old under the law, you can be deemed negligent. And I wouldn't back on that. So ultimately, we consider it a win. Went all the way to jury trial in Waukesha County, and they split it 50-50. Each of them had to pay half of it, which was the result that we were asking for all along. They wanted us to pay all of it, and that the teenager, that her insurance company pay nothing at all. So we mediated it. They wouldn't budge from that. We went to trial. So we called it a victory because we said it should have been a 50-50 split all along. But the point and the reason that I'm bringing it up is because this incident did not happen at either of their homes. It happened at a third, location, a hotel. Um, and that hotel's insurance company was still able to sue the insurance companies of the homes that these respective parties owned. So that's why it's important to have insurance coverage. You never know where you might be and something might happen, and it might be covered under that policy for your own protection. It would have been a very sad thing if this young couple hadn't had insurance and they start their married life off with $40,000 worth of debt.
So that was paid by the homeowner insurance.
Was paid by the homeowner's insurance. Absolutely.
So that's why it's very important to read those writers, to know your rights. I mean, we always talk about, we need to know the law, we need to know what's going on so that we can protect ourselves. But we many times neglect learning these little things which can protect us from a big cause. As you mentioned, this young couple will go in their marriage with $40,000 in debt, will not let them have a good start of their life. And that's the biggest thing we have. There's a big discussion going on student loans, that when they finish their loan school, they go to the professional life, they have a debt with them. So in this situation, in your case, Coral, it was amazing to have a homeowner insurance. Is make sure, again, I'm going to emphasize on this one again, I'm going to say before we end the show,
Mhm.
please sit with your insurance agent. Ask that person, read writers over and over again. That is their job. That is what they do when they come to you and have you sign those documents. It's very, very important.
Okay. Thank you for that, Golbaz. And it looks like we've got one more caller we're going to try to take. Caller, thank you for calling with your question.
It's not home insurance, it's accidental travel insurance. Is that worth taking?
Yeah. Are you able to take us off a speakerphone? We're having trouble hearing you.
Okay. This any,
Yep, it's better. We're winding down though quick though, but can you get your question in? We really want to hear from you.
I just like to know your opinion. Accidental insurance travel, it covers all those and injury. Is it worth having?
You know what I would recommend is that you talk to an insurance agent. I think they'd be far more qualified to answer that question. They'll know the ins and outs of those types of policies and recommend for you the very best fit. But I do appreciate your question.
All right, thank you. I appreciate it.
Okay, thank you
Thank
so
you so
much.
much.
Okay, it looks like that's all we have time for today. This is Tony Talks with Attorney 12. Thank you, Bob Skills, for joining us. We're looking forward